Carrying a balance on your credit card will help your credit score. But is that really true? In 2022, the number of credit card accounts reached the highest level in 21 years. According to the latest consumer debt data from the Federal Reserve Bank of New York, Americans' total credit card balances in the third quarter of 2022 was $925 billion. That's a $38 billion jump from $887 billion in the first quarter of 2022. The truth is, carrying a balance on your credit card can actually hurt your credit score. When you carry a balance, you're charged interest, and that interest adds up.
If you use your credit cards, you do not want to be rich.
The average APR for new credit card offers is a staggering 22.91%, and the average APR for all accounts that accrued interest was 18.43%. The Federal Reserve is raising interest rates to lower inflation.
Our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time.
This will cause interest on credit cards to increase. Money spent each month paying interest on a credit card balance with no return can be invested in stocks, which pay out quarterly dividends with the potential of continued growth. People say they do not have money to invest, but fail to see the money they are paying on credit cards with criminal interest rates can be used to create passive income. The average credit card holder pays a staggering $2,500 a year on credit card interest.
Your credit card, you know what your return is, right? If you get off, you're paying 15, 20% interest in one way or the other. And if you pay that down, you just earn 15 or 20%.
It's that simple.
This same $2,500 can buy 7 shares of Vanguard's VU ETF. With a small expense ratio of 0.03%, at small investment of $1, an investor can expect a return of 10% on their investment. VU over the past 10 years has returned on average a 12% profit to its investors. The key characteristic of this ETF's performance is the vast majority of its assets. Its holdings are in defensive sectors such as healthcare, financials, and consumer discretionary.
If you use your credit cards, you do not want to be rich. Pay off all your credit cards and burn them.
Renting is more expensive than buying a home. But is that actually true? The median sale price of U.S. homes more than tripled between 1992 and 2021 from under $150,000 to over $500,000. To make matters worse, big investors are getting in on the action. They see single-family homes and apartments as a new opportunity for profits. In fact, these investors bought a quarter of all single-family homes in the U.S. in 2021. In some states, like Arizona, Nevada, California, and Texas, the number was even higher. In Georgia, an astonishing 1/3 of all homes purchased were by investors. Renting a home may not be the traditional American dream, but it offers a world of freedom and flexibility. Saving money in a bank account is always the best option. Are you tired of watching your hard-earned money sit in a savings account earning no interest? It's time to consider other options for your savings. The average interest rate on most savings accounts is currently around 0.23%. These rates are extremely low compared to other types of investment options. Inflation eats away at the value of your money over time, and with current interest rates, your savings may not even keep up with the cost of living. Instead, consider diversifying your savings, investing in stocks, mutual funds, or real estate. These options have the potential for higher returns and will help you reach your financial goals faster. Don't let your money sit idly. Make it work for you. A college degree may seem like the key to a successful career and a high salary, but the reality is much different. A college degree does not guarantee anything. Higher education costs are skyrocketing, and the job market has become increasingly competitive. Many graduates find themselves struggling to find a good job, and if they do, the pay may not match their student loans. A degree doesn't guarantee job security either. With the emergence of AI, less technical job fields are being replaced, and many jobs that existed when you graduated may no longer exist in the future. The value of a college education should not be measured by the promise of a high salary or a good job. A college education should be viewed as an opportunity to gain knowledge, develop skills, and broaden one's perspective. It's a personal journey of growth and self-discovery. It's important to remember that a college degree is not the only path to success. There are many people who have achieved financial success without a college degree. Make sure to watch next Tesla Stock Analysis for Every Investor.